The crypto market is bleeding again, and this time, it's not because of a Bitcoin ETF delay or another FTX-style collapse. It's something far more global and unpredictable, the tariff chaos that's shaking not just crypto, but the entire financial world. If you've been watching the charts lately, you've probably seen Bitcoin dip below key support levels, altcoins tanking double digits, and fear crawling back into the market. So what exactly is going on? Let's break it down, no hype, no sugarcoating, just real talk. This week, the U.S. and several major economies reignited trade tensions that many thought were left behind years ago. The U.S. administration announced a fresh wave of tariffs on key imports, targeting everything from Asian tech products to European metals, and the global markets immediately felt the shockwave. Stocks dipped, oil prices spiked, and investors everywhere started moving into safe haven assets like gold and bonds. And you know what that means: risk assets like crypto take the hit first. See, what most people don't realize is that crypto doesn't live in a vacuum. It's not disconnected from macroeconomics, it's tied to global liquidity, to investor sentiment, and to what central banks and governments do. When tariffs rise, it's basically a signal that trade is slowing, inflation pressures are increasing, and economic growth is uncertain. Investors hate uncertainty. They start selling off volatile assets, and unfortunately, Bitcoin and altcoins hop that list every single time. But here's where it gets even more chaotic. The tariff wars don't just hurt global trade, they also disrupt supply chains, and that trickles down to the crypto industry itself. Mining equipment, GPU prices, chip production, all of these rely on smooth international trade. When tariffs kick in, production costs rise, shipments delay, and the cost of running mining operations can spike. So it's not just prices falling on exchanges, it's a direct operational hit to the infrastructure that powers the crypto ecosystem. And yet, here's the twist: while most retail traders panic sell, the smart money isn't completely out. In fact, large wallets are still accumulating Bitcoin in smaller tranches. On-chain data shows a clear pattern: whales are buying the dips. Why? Because they know tariff-driven corrections are short-term shocks, not long-term trend reversals. If we look back historically, similar trade disruptions like in 2018 during the Trump-China tariff battles pushed markets down temporarily, but Bitcoin recovered stronger each time once the macro dust settled. Now, let's talk numbers. Bitcoin recently lost its support around $63,000, slipping briefly under $60 before bouncing slightly. Ethereum followed, dropping under 2,400, while major altcoins like Solana, Avalanche, and XRP saw 10–15% declines in 48 hours. But notice this volume has been massive. Panic selling always brings huge volume, and that's often a sign that a local bottom is forming. If you're watching the ESI and MACD indicators, they're screaming oversold across the board. So what's the real play here? Should you buy the dip or stay on the sidelines? Honestly, this is not financial advice, but here's the mindset it takes: zoom out. Ask yourself, has crypto's fundamental value changed because of tariffs? No. Bitcoin's halving is still around the corner. Ethereum's staking ecosystem is still growing. Layer 2 projects are expanding faster than ever. The problem isn't with crypto, it's with the macro environment, and that will stabilize over time. In the short term, though, expect more volatility. Every new tariff headline will shake the market. Expect fakeouts, rebounds, and sideways trading. But long term? These are the moments that build generational wealth, when everyone else is fearful and you're accumulating intelligently. Remember what happened during COVID? During the banking crisis? Every crash felt like the end, until it was. Let's also not ignore the geopolitical undercurrent here. The tariff chaos isn't just about trade, it's about economic control and digital power. As traditional systems fight over tariffs, more people are realizing that crypto is the only truly borderless financial system. No tariffs, no intermediaries, no politics, just math and code. This narrative will only get stronger as governments tighten their economic policies. Ironically, the very chaos that's causing crypto to dip now might be the fuel that drives its next bull run. So here's the takeaway: don't let the noise distract you. Markets move in cycles, and panic doesn't pay. The smart strategy is to stay informed, not emotional. Watch what the whales are doing. Track on-chain flows. Understand global policy moves, because in 2025 and beyond, crypto's growth will be shaped by global economics, not just hype cycles. In closing, the tariff chaos might have crashed the market for now, but it's also revealing something powerful: crypto's resilience. Every dip, every panic, every macro event tests this industry, and yet, it survives. So stay grounded, stay alert, and remember, this market rewards patience, not panic. That's all for today's Real Talk. If you found this breakdown helpful, drop a like, subscribe for daily market updates, and let me know in the comments: are you buying this dip, or sitting this chaos out? Because the next move might just define the rest of this cycle.